Hey guys, happy Sunday. Welcome back. In this video, I'm not going to bore you with a bunch of numbers that you probably have already seen. We're going to just focus on my thoughts as I listened again this weekend to the earnings call from Adam and Sean Goodman, and maybe go over the dashboard with you and talk about some projections that I've done for the rest of this year, 2025 and 2026. Let's get right into it. Hopefully you watched yesterday's video where I did the quick summary of Cinemark's Q2 earnings. And one thing that I mentioned in that video is that Wall Street really cares about increasing top line revenue, increasing net income, increasing earnings per share. And ideally, you want that net income and the earnings to be positive. And so I want to reflect here for a minute on the AMC revenue chart. Obviously, with COVID, we had that big dip and the industry has slowly been recovering. 2023 revenue for AMC came in just under $5 billion. We're going to come close to that in 2024, hampered this year by the actors and writers strike. But my expectations, and I spent the better part of today going through my spreadsheet again, doing all sorts of projections. My expectation based on what all of the industry experts are saying is that we're going to continue to see in 2025 and 2026 this progression of revenue for AMC continue to go up. So that is one positive that the company and investors have to look forward to. And of course, that is going to be very important to Wall Street and institutional investors as well. And we need that big money to come in and move the stock price up. This is just my forecast. It's not a guarantee, but based on what the industry experts are telling us for the industry box office in 2025 and 2026, I expect both of those years to be over $5 billion in revenue for AMC, with 2026 being higher than 2025. So we get this nice continued progression of total revenue going up, exactly what we want to see. When we look at annual net income, there is this progression where it is getting better every year, but we're still not above this line. We need to get in the positive direction. And you guys want to know, when is that going to happen and what is it going to take? Based on my spreadsheet projections, the break-even point, I went through the numbers again today, is somewhere around $10.5 billion. And that is a very conservative estimate because I'm not counting any improvements from the company. And we know there are improvements happening. Rent is going to go down as they continue to close theaters. We expect the interest payments to go down as well. That means that, in my mind anyways, $10.5 billion domestic box office is a realistic and probably conservative number as AMC chips away at cost and the revenue improves on the top line. You could potentially see a positive net income from AMC with the domestic box office being as low as $10 billion. But for now, until I see a couple more quarters of numbers from AMC, I'm going to say, let's just kind of mark on the map $10.5 billion, and we will update it as numbers come in over the next couple quarters and we see what, if any, cost reductions continue to happen. So when we hear Adam and Sean saying in the call that the company is likely not going to need box office to return to pre-pandemic levels, based on my analysis in the spreadsheet and my projections and knowing their cost structure, I think that is a very reasonable and factual statement based on what we know right now. Another thing, yesterday when we were talking about Cinemark, we looked and saw that their balance sheet is in pretty good shape. They have positive working capital and positive shareholder equity. AMC is not quite there yet. And you guys might remember a year ago while we were going through the whole court thing, talking about the AMC ape conversion, I was pounding the table saying this got to be done because AMC has a really bad working capital situation. At that point, highlighted in pink over here on the right, it was almost $1 billion negative working capital. And the company has done a lot since then to fix that situation just in the last year. If we look at total current assets, 1.07 billion minus total current liabilities, 1.6 billion, the company does still have a negative 575 million working capital. But if you want to get really nerdy into accounting and finance stuff and CPAs, if I'm wrong, feel free to drop it in the comments, but I know I'm right here. We can add back in this unearned revenue of 399 million. That is deferred income that AMC has from selling gift cards and things like that. We can add that back into the working capital. So 575 plus 400 million means that their working capital situation in reality is minus $175 million. It's only going to take a couple of positive quarters of adding cash to the balance sheet, or alternatively, some of the debt could be removed from the balance sheet, improving the liability side. And all of a sudden you are in a situation where you now have positive working capital. We're not quite there yet. We're probably several quarters away, but you can see that improvement is being made and we're almost all the way there. The other thing on the balance sheet that AMC needs to fix is the shareholders' equity, although I think they will get a little bit of a pass on that if they are showing increasing net income and positive earnings, positive free cash flow. How do they fix the shareholders' equity though? The easiest way for AMC to fix that is to book positive income, add cash to the balance sheet, and to continue to remove theaters from the fleet. That would reduce the leases that are on here on the balance sheet and pay off the debt, which would reduce that part of the liability. That is going to be a bit of a longer work in progress, not something I expect to see fixed in a couple of quarters, but you will continue to see improvement on that. You can see that going back to December 2022, there's already been a $1 billion improvement in shareholders' equity. Give it a little time, let the box office improve, and this number will continue to improve as well. The other thing we talked about yesterday on the video was the importance of positive free cash flow. For the Q2 that just ended, AMC had negative free cash flow. It is my expectation, if the box office performs as we are expecting for Q3 and Q4, AMC is likely to book positive free cash flow for both quarters, as well as on an annual basis in 2025 and 2026, based on our current expectations of the continuing growth of the domestic and global box office. So what we just went over was about every red box here on the dashboard. It looks ugly for AMC. This is still a risky speculative play until the point where box office improves and the company is generating some positive net income, positive free cash flow. This is a snapshot of how it looks right now. You must be able to look forward and ask yourself, do you think box office is going to improve or not? That is the gamble if you're investing in AMC. If you don't think box office is going to grow, this dashboard is not going to get prettier. There's not going to be more green on it. If you believe that box office is likely to grow and AMC is going to keep its current market share or grow its market share, then this dashboard, you're going to see a lot more of these red boxes eventually turn yellow and then turn green. This is going to be a play of patience. It's not going to be resolved overnight, and you must have that conviction that the box office is going to grow if you are investing in this stock. For me, I do my research by looking at industry trade magazines, websites, and listening to CEOs, not only in AMC, but IMAX, Cinemark, and getting a feeling from all of them, what is their thought about if the box office is going to grow or not. So don't take my word for it. Do your own research. Listen to CEOs of movie companies. What are their thoughts on the box office? If you're listening to other YouTube channels who don't invest in the movie industry, maybe they're a gamer or something, they're probably going to want you to invest in their stock, and they're going to give you bad information about the movie industry. Guys, do your own research. Listen to all of the CEOs in this industry, and then make up your mind about what is likely to happen the box office over the next 12 to 36 months. The final two questions that everybody has is there going to be more dilution? And Tony, why are you advocating a reverse split? I'm not advocating a reverse split. People are misquoting me and taking what I said out of context. So we've already covered that ad nauseum. Don't listen to liars, guys. If you want to know what I said, listen to the live stream. You don't need someone else to reinterpret what I said to try and trash talk this channel. As far as dilution though, I don't know the answer to that. We need to pay careful attention to the cash balance in the box office and how AMC is performing over the next couple quarters. And bear in mind that they have told us that they want to continue to repair the balance sheet. So is it possible that there could be more dilution? Possible, yeah, of course. But I can't tell you the answer to that right now. As always, thanks for watching. If you have questions or comments, please drop them down below. I'm Tony Denaro, and I will see ya on the next video.